Right. So we have NASDAQ daily chart on the left-hand side. The first thing we want to take a look at here is that small little volume imbalance there. So where we opened up today, while trading was going on, it was already up in here. It still had a volume imbalance there. And this drop down was overnight in the London session. And we came up into here, and then we came back down in and rallied back up into the latter portion of the day. And we'll look at that price action now. All right, so we have a premium wick here. Again, grading those wicks. So we have the close of this candlestick here. Okay, so this is Thursday's premium wick graded. So we have our quadrant levels on it. And then they appear over here on the left-hand side. So if you look at the intraday 1 minute chart, you can see how price ran right up into that. It swept it by a little bit. That's classic. And then we have a market breakdown. And we'll look at this wick here, and we'll talk about market structure shifts and the valid ones and what's not. 24,735 I thought was suspect. Okay, and the reason why is obviously it's pre-session sell-side liquidity. This gap in here is first presented fair value gap. And we rally up and we draw right back down into it again. So it created it here. Failure to launch, didn't take out that high. Trades back down in. The bodies stay inside of the first presented fair value gap. Rallies, hits the high over here. Then breaks lower. This is not a market structure shift because it's a wick inside of a buy side balance, sell side inefficiency. So there's two PD arrays that are going to conflict. We don't want to look at that as a market structure shift. So it trades back up. Yes, this fair value gap, you could have went short there. I'm not trying to do that. Market breaks lower again here. And notice it's just finding sensitivity right at that fair value gap's low point. That was not meaningful. Didn't close, didn't have a body down there. So it just touched it. Rally back once more. Here's another fair value gap in here. You could take that short. There's nothing wrong with that short. For you, I'm not taking that short. And then we had the market break lower, trade back down into the first potential fair value gap. Look at the bodies. The wick trades down into it, but it doesn't breach it to the downside. It rallies once more into and trades up into that fair value gap there, which we continue through, which makes this what? A reclaimed bearish fair value gap. Now, this imbalance in here, we want to see it break through that. And around here, consequent encroachment's trading there. And if you look real small, fair value gap in that little area as well. So these are all things that were pertinent to this. And the market trades lower. It trades back down into the first potential fair value gap. And notice it was here and here, it was sensitive. But now we're back into it again. A third time is not a charm. Okay, it's gonna break through. And targeted that sell side on that low and these relative equal lows here. So reaching for a pre-market session sell side liquidity. And we get it there. You want to take that when you're in a primary bullish market, you want to take that like a tick or two above or right at it, and worst case scenario, maybe one tick below it, because you can get these very fickle type reverses like this when it's an underlyingly bullish market. Now, when it's a bearish market, and you can extend those targets and try to reach the market breaks lower and trades right back up into here. You could have added into this and broke lower. Immediate rebalance in here, just delicious on the downside, breaking lower, touch the consequent encroachment here, breaks and delivers right below 24,735. Now, later on in the afternoon, had I been in front of the charts, I would have been all over this bad boy, this little section of price action at volume imbalance, because we in fact traded back into that. So I'm extending the first potential fair value gap over here into the afternoon, that little gnarly retracement in here. Then it broke lower and then traded right down into that volume imbalance on the daily chart. I mean, look how beautiful that is. That's this right here. So up here, then came all the way back down intraday to there. Then right back up. Look at this crazy rally back up. They're not letting anybody get on board with that. This is your only opportunity here. First potential fair value gap at the consequent encroachment the bodies are expecting, and then sends it higher, right up in here to take out that high. Today's initial high, and then the black line is Thursday's daily high. That's this right here, okay? It runs that liquidity out, and we have that liquidity being taken here. And ultimately, it just keeps on powering higher. Okay, switch up a little bit here. So Pound dollar, the buy side imbalance, sell side inefficiency here, I graded that as well. And the market starts to sell off as we expected with the euro to continue lower. The pound did the same thing. So dollar was going higher. It moved above that range I told you I wanted to see, and it would treat that inversion fair value gap as a discount array. We've seen that. And then the market breaks lower and trades right back into this fair value gap. This discount wick, this is for your notes, okay? If we open where we close, listen to what I'm saying. On the daily chart, if we open where we closed and we have a discount wick and we're bearish, you want to grade that discount wick because you're going to be able to use that in the first 30 minutes to an hour of trading, and it'll be very sensitive to these levels. Here we can see we have true day start, which is midnight Eastern time. Asian session, buy side liquidity. The market trades up into that, sweeps it, breaks lower, and then comes right back up into a fair value gap. This in here, breakaway during London open kill zone. Now, when I trade Forex, I'm looking at 1 a.m. to 5 a.m. That's my entire universe of London trading. So here's what I look at. If you ever want to know what's the actual times that Michael would have on his chart, it's 1 a.m. Eastern time to 5 a.m. Anywhere in there, I'm looking for a setup. Okay. So here we get that setup here. It breaks lower. Look at the body's respect and consequent encroachment of that wick over here. Dives into just short of the fair value gap high here. And then we go into what? New York open kill zone, 7 a.m. Market breaks down a little bit, comes right back up to a bearish fair value gap, and then tanks right into lower quadrant of the fair value gap over here on the daily chart for pound dollar. Really, really nice little setups in here. This is just a dandy of a move on the London side, and continuation in New York, as you might expect, digging into a discount array derived from the daily chart.